part of this event for us. I see a lot of very friendly, familiar faces, and I'm glad that they're out of the Zoom windows and the Teams windows, so thank you so much. We thought that one of the things that is unique about Avasant is that we bring both the research as well as the advisory on the ground perspective to our insight about the market. So for the outsourcing outlook, we got together and I did invite Rakesh to join because he will be able to give some perspectives which are very from the ground, what he's seeing in some conversations, direct live conversations with clients as well. So I know Anupam mentioned that there is no normal anymore, and one of the big things that have really happened at a macro level, of course, is that our entire industry was built on the world is flat philosophy, right? But increasingly over the last couple of years, I think there have been a lot of changes. What we are seeing through conflicts, through partnerships, pacts, is that there are a few trading blocks that are emerging, right? Of course, the China, Russia, that block, and of course the blue block, which is somehow more aligned to where we are from an IT industry perspective. So North America, Europe, South Africa, India, Australia. So as we go forward, I think some of these lines are going to become a little bit more harder, at least for a fair amount of time. And this will certainly have an impact on our industry, outsourcing, and all of that. So we do want to talk about this to a certain degree, but then we want to move into what we feel or what we know about what 2023 will look like.
Yeah, I just wanted to add how this is actually manifesting in the client environments. Last August, I started working for a global e-commerce and a retail giant. They had been affected by two factors, which all of us in the room happened to be a pretty growth market, pretty big growth market, as well as a lot of their supply chain for the APAC region was actually established out of China. As if that was not enough, fast forward a couple of years later, there was Ukraine and Russia that kicked in, right? That war thing kicked in. And then for them, that zone was again a growth market, as well as a lot of the supply chain systems were based out of that. So believe it or not, they actually, the SIP size actually shrunk to half. The machinery that they were left with, right, the operational engines, the support systems, all of that was built for double the size of the SIP, whereas the SIP itself shrunk to half of it. Now what they are busy doing is actually redrawing those supply chain lines. They are actually redrawing those support models. They had lots of support structure based out of China, based out of Ukraine. We know that Ukraine is a good sourcing market for technology talent. So all of those lines are actually being thought through as we work with our client. We actually see those iron curtains really falling across the lines that Swapnil was talking about. So it's not in theory anymore. We are seeing that actually manifesting itself in the way clients are having to think on their feet and how they are really working on the front.
Right. Last quarter, towards December, I think we did another survey talking about, we've been hearing about the recession and its impact for a fair amount of time. So we wanted to see what are the enterprises thinking about it. Fortunately for everyone in this room, I think the news is not particularly gloomy. I think it's pretty positive. I think despite all of those constraints that everyone is going through, IT operational budgets, 72% of organizations are continuing to have a lot of investment on the IT operations side. One part of it is, of course, and maybe Rakesh, you want to talk about how the Capex to Opex transformation is happening.
Yeah, absolutely. I know that with the think tank in the room, there is one that all of us would agree to, and that is that the Capex cycle actually leads to the Opex cycle. 2 to 3 years back, when we were right in the middle of the pandemic, there were these big ticket investment items, and I can quote 2 of my own clients who actually went through that transformation journey for their digital transformation. Again, this e-commerce retail giant, they committed to a $350 million Salesforce global rollout. There is another client of mine which is a global eye care solution provider. They committed to rolling out SAP across 10 or 12 of their global manufacturing plants. Again, a commitment of around $450 million plus, right? So that was 3 to 4 years back. But fast forward to today, what's happening really is they are actually at the doorstep of operationalizing those workloads. Now, there's a slight bit of difference that all of us would agree, right? If you're working on a capital project, you have committed big time to the executive management. You're working on tight budgets, a timeline, milestones associated with all of those. But operationally, you all want to be flexible, right? Because that's where you get creative about, can we go to offshore? Can we, let's say, have an alternate sourcing model? Can we build a captive for ourselves and things like that? And what happens? If I were a client, what I would do is I would dial up one of you, right, the service providers. And that's what is actually showing up here in terms of increasing share of outsourcing across industries. So I think, what our trend shows is really manifesting itself in what we are seeing in the marketplace. Capex really leading into Opex and
industries, whether it's retail or if it's healthcare, patient facing. I think that's where a lot of these operational budgets are increasing at a faster rate or growing at a faster rate than some of the more B2B kind of sectors that we are seeing. And again, coming from the Capex to the Opex part of it, I think healthcare saw a lot of transition that happened in the last couple of years. Now, a lot of those changes that had happened have become standard business process, the standard operating procedure for several of these healthcare companies, and those are now manifesting in IT operational budget growth. So all in all, I think, and this was as latest as late last year, things were fairly positive. But then when we came to the first calendar quarter, and I know a lot of people here have been looking at this quarter and going, what's going on, right? Lots of things are happening, the inflationary pressures were there. Central banks almost across the world took steps like increasing the interest rates to manage some of those inflation issues. The Russia-Ukraine war completed a year, right? It was supposed to end, I think, in 4 days, 5 days. It's been a year. And that continues to have a certain impact across the world. Right? Then when we came to March, as if that was not enough, we had SVB, and then we had Signature, then we had UBS versus Credit Suisse. So all of these changes have put a little bit of pressure across the industry. I mean, BFSI is a central industry for all economies, right? So across any impact on the BFSI industry does have an impact on overall spending across different industries. The other challenge, of course, is for everyone in this room, I think BFSI continues to be a very, very important sector. I think if we look at, we did an analysis of the revenue mix of most of the important key service providers in this space, and 61% of Indian IT exports were happening to the US. Now, BFSI plus North America, there is a little bit of an exposure. So we do expect that some amount of impact from all the changes that are happening will happen. However, our belief is that this is going to be a short to medium term impact over the next couple of quarters, because technology spending is kind of fundamental to how these companies have grown. Now, if we take a step back, and I was having this conversation outside as well with a couple of folks, COVID has taught us something, right? The companies or the enterprises who cut off all spending or cut off all technology spending, as soon as COVID hit, were the ones who eventually really suffered the most, because they were not able to bring in the agility that Anupam spoke about. They were not able to make the changes as rapidly as they had to be. They were not able to go to a remote working environment as quickly as some of the other companies were able to. So now that those learnings are some of the things that are coming up in conversations with clients, that while they want to pause a little bit or go a little deeper in understanding the return of investment on some of these spends, I don't think we're hearing any conversations where spend has been put indefinitely on hold. So that, I think, despite a tough quarter, macroeconomic pressures and this banking stress, we do expect things to after a bit of a pause to come back to normal.
I mean, I do want to kind of stress upon was that there are these balancing factors that are kicking in, right? So maybe the sentiment is playing a little too hard right now, which is for all the good reasons, right? So I think sentiments apart, a lot of our partners here who have big exposure to BFSI market, right, and it continues to grow. If you went back to 2008, that number there, 41% stood at 30%. So IT outsourcing market itself stayed exposed at levels of 30%. Now we are exposed even more. But despite that, I think there are a few balancing factors that are kicking in. Right? One is the dollar itself. For all of us who have huge exposure to the US market, the dollar itself in the last 12 months, gained about 12% overall, right, as a currency. That's one. The second is, you saw the graphic in the previous slide. A lot of the other industries are also kind of balancing that, trade-off with what may or may not.
Of enterprises. I mean, if you take a historical view, typically this is a bit of a sine wave that happens, right? There is a lot of focus first on innovation. Typical cycles used to be almost 3 years where all CIOs would have more budgets to really focus on innovation, make those big investments. And then typically we go into a cost reduction cycle. Again, that used to be 3 years earlier, during the dot-com bust of the credit crisis and all of that. Right? So this is sort of the nature of doing business in our industry. I think there will be innovation cycles, there will be cost reduction cycles. But what is happening now increasingly is that these cycles are no longer 3 years apart. Right? They're getting compressed. What is happening here is that the priorities for business, innovation continues to be a priority, but they do go through these periods where, we need to have cost optimization, but that cycle doesn't last for a very long time. So what we see is that there is a lot of questions coming about funding of some of these innovation investments at the enterprises. There is no question about whether innovation is required or not, right? But the question is more about how do we fund it. And that's why what we are seeing right now, I think a lot of initial conversations that are happening with clients are focused on cost reductions, but we don't expect these to be very long cycles. I think pretty soon, I think they're coming together, and cost reduction and innovation will kind of run hand in hand. Is that something you're also saying?
Yeah, no, absolutely. I think this chart actually talks to, in my mind, the long and short of investment cycles, right? With what the clients are trying to invest with the providers. Continuing with the same example of the e-commerce client that I spoke of. Obviously, X, but then the immediate lever happens to be outsourcing. So they are dialing the service providers. But the other thing they're also doing is putting some of the long bets. One of the questions that they are evaluating right now is, can we go captive? Now, that's a commitment which is for, let's say, 10 plus years or even longer. Now, for those kind of long bets, right, that's something that comes mixed with immediate questions that they're asking us as to what can we put up as savings in our executive dashboard in the 6 months, in the 8 months. When does our transition get over? What kind of financial creativity can our providers actually talk to us about in the immediate term? Because we have to meet our quarterly targets and so on and so forth. So I think there is this good, healthy balance of long and short, which clients are trying to strategize in all the bets that they are taking right now. And that's what our wave also shows, right? It kind of gets shorter, but the wave still continues to happen.
They've been doing these enterprise IT spending and staffing surveys for the last 30, 35 years or so. So we went back, dug into the archives a little bit. And if you see here, can you see the... So each of these red years are really some of the recession years that came from as far back as 91 to the 2001 Y2K, that area. Then the 2008 credit crisis, 2016, and then 2020 as well, which is the COVID crisis. Now, if you see the pattern here, and this is what is most interesting and most useful, I think, for this audience as well, is that typically post the recession years, we're always seeing a little spike in technology spending. This has been the case for a very long time, and obviously the logic for that is that after the initial pause because of the recession, you do realize that it is time to transform your business and attune it to the new realities, and that's where a lot of this spending starts to happen. Now, we're not in the middle of the crisis. I think on the banking side, while there have been some issues, I don't think there is any fundamental problem with the banking sector as a whole. So hopefully we're not in a full-blown crisis. But in any case, we do expect to see technology spending to stay stable and maybe even grow a little bit more, even if we do go into a crisis over the next 2-3 years. History is telling us this. The other thing that's telling us is what I spoke about earlier. When COVID hit, the companies who stopped spending completely suffered the most. And I don't think that's ever going to happen again. I think that those are lessons learned, hard lessons learned. So we do expect that spending to continue to grow. As I said, we do these enterprise surveys on an ongoing basis. And the chart at the bottom left, if you see, this is a study that we did actually in January of this year, 2023. So we asked them, okay, so short term is fine, but maybe for the next 3 years, how much do you think you're going to be changing your outsourcing amount of what we found was that only 17% were looking to actually decrease the IT outsourcing part of it. 47% organizations, and this is when some of the macroeconomic pressures were already in place, were still talking about increasing their outsourcing spends. So we kind of dug into it a little bit more. And obviously the reason for that fundamentally is that the kind of investments that are happening are in areas like digital CX, cloudification, cybersecurity, platformization. And these are fundamental changes which alter the way an organization functions on a long-term basis. These are also investments which are giving competitive advantage to an organization, right? So these are not investments that are good to have or discretionary to a certain degree. IT has always been considered discretionary spend. I would argue that it is no longer the case. It's not a pure discretionary piece. And we're also seeing that because I know Rakesh, we're all really seeing a lot of CFO organizations part of decision making around technology investments as well, or the CEOs or the COOs involved, and that's going to continue to happen. Now, because of this, if you have to do all of these changes, I think the outsourcing is an imperative that will continue to be there, and that's why I think we can reconcile that these numbers are making sense. And even if the next couple of quarters are a little slower from a decision-making perspective, we do see that long-term view, I don't think these strategies are going to change. I think it's a relatively positive outlook when it comes to outsourcing as well in the next, at least the 3 years maybe.
Actually, Swapnil, thanks for bringing the CFO reference. I do want to mention that at least the last 5 clients that I've had, personally budgets, IT investments and things that IT can do for them. So absolutely agree with you there, Swapnil. I do want to touch upon some of these future investment areas. For a few of the practitioners who get the chance to look at the inventory, the applications inventory of client environments. Right? If you just opened up, take any industry, you will probably find hundreds of line items and probably thrown in an Excel sheet. We know how clients are, right? So, put up in the Excel sheet and things like that. But if you categorize those line items as SaaS or cloud products versus homegrown products, you would find that there would be a significant number of or percentage of SaaS or cloud products actually justifying these 2 points, right? The second and the fourth bullet point. So there is absolutely a shift that's happening in the marketplace, right, in the client environments. The other thing that we are seeing is that clients right now have something called as the SaaS review board. Like it or not, there is a SaaS review board with most of the clients that I'm in conversations with, because SaaS happens to be a big investment area for all of them. That's one. I do want to also mention the cybersecurity angle. Back in 2018-19, when I was benchmarking a leading North American airline, our benchmark, that was a time when we were looking at computer economics to be acquisition target for ourselves. So I looked at one of the computer economics reports, and the cyber security investments, median in the market happened to be in that 6 to 7% band. The client actually came in the 2 to 3% band. No surprises there. We said, okay, you got to invest in cyber security. Fast forward to today, I take any organization, their average spend on cyber security happens to be in the band of 8 to 10%. And that's what computer economics has also shown in multiple of our reports. So the market is actually measuring up to where these leading technologies are going, and these are in fact those future investment and growth areas as we see in client environments.
I think IT services, of course, that's fundamental, and we'll talk a little bit more about in detail and a little granular level, business process business process outsourcing. The third area, I think, is the engineering services space. It is also connecting a little bit to the regionalization slide that I spoke about earlier. China is a big manufacturing process, engineering services space, but now I think a lot of the outsourcing of that is going to come to India as well. So engineering services is another increasing area, and we'll talk a little bit more about it. The last one is sustainability. Most of our enterprises, the conversations that we have, do center around sustainability initiatives that they need to do. Right? There are several regulatory changes that have happened. There are more reporting angles that are coming in. So we do expect the next level of opportunity to come from these initiatives that enterprises will have around sustainability. We've also tried to make sure that some of the panels that you will be hearing from through the day are covering some of these main changes in a lot more granularity. But just to set the context initially, Rakesh and I am going to give you a quick overview, and then hopefully during those panel discussions you'll see more details coming in. Now,
absolutely. I mean, as we look into this slide, to what we have up on the slide. But I do want to kind of bring forth one point here, and that is, these are not isolated islands on a graph. Right? These are things that are working in congruence with each other to build up those digital transformation story. I do want to kind of, so the problem statement there was, how do I make my contact center more effective? Right? There are these hundreds and thousands of calls that are coming to my contact center. Tell me, how do I stop those calls from coming? It's not that the client doesn't want to interact with the customer, but I want to kind of channelize those into various different things. And when we stepped into the client environment, one of the things that they were doing right was implementing a cloud-based platform. I'll name it anyways, Genesis. And they thought that was the be-all and end-all of the transformation journey that they would do in a contact center transformation exercise. But then what we figured out was they were probably 25% of the way in their entire transformation journey. Right? Having the requisite infrastructure in place is probably only 25%. Then you will probably do a little bit of that automation, right, where you would want that 360-degree view of the customer. Then you would want to the next step where the analytics, machine learning, and today maybe a little bit of generative AI, that kicks in to make that conversation that natural with the customer, so that you know what they are going to ask, you predict their questions, you predict an answer and be ready with it. And finally affecting the customer experience journey. So I think those were those 4 steps that we drew for them. And this was in congruence with all of these technologies that you see on the chart here. So, I mean, one of the things that we always keep telling our clients is that don't look at these investment areas as siloed investment areas. It is that like-mindedness of various different organizational groups. So today, I would, I think you would all agree that there is a separate CDO organization, Chief Data and Analytics Organization, right? Now, that reports not to the Chief Strategy Officer, not to the Chief Information Officer, right? So I think that's where the operating models really kick in, to bring all these technologies together and making sure that it really works towards the transformation agenda that clients are looking forward to.
has been in the last couple of years is the digital customer experience adoption. I think customers have changed for a lot of enterprises today. Their expectations have completely changed. And this has led to a lot of investment from a technology side, also on the BPO side, right? So digital CX across industries, no surprises, retail CPG is the highest adopter of digital CX, followed by BFSI and all that, right? So these, and this is not a trend which is, here today and gone tomorrow. I think the very nature of customers has changed, and we will always be looking at more digital customer experience as we move forward. The other angle to this now is that, again, during the pandemic, what happened was that a lot of the business processes that were considered unoutsourceable or too core for our business to outsource, I think they were forced to outsource some of them, even if it was to their own employees sitting in their houses and all that, right? So what this has done is it has really opened up a few locks in the minds of enterprises that not all core functions are so core that they cannot be outsourced. And that's why I think there's a lot of push right now, and this is also happening in some of our clients, where they're looking at, looking at some of these, for example, patient onboarding. Now, this was considered the first point of contact with the patient, and hence it was supposed to be very sacrosanct. This has to be in-house, this is the experience that they get. But we are seeing instances of how this can be standardized and outsourced, right? And it's happening across industries. We've listed down a few industries, but every day we're having conversations where more processes which were considered sacrosanct, core, unoutsourceable are being considered for business process transformation. And this is a great opportunity because, I think most of the organizations here have also invested a lot in domain talent. And this is where domain talent matches with the business process transformation skill sets that you have. One of the questions that we have that will be addressed in the panel discussion is also, will it all become verticalized or will the horizontal function still exist? It's a little out there, but we could be on that path. So I won't steal the panel's thunder, but look out for that. So yeah, I think this is why we are saying that this the verticalization of BPO could be the other growth area when it comes to outsourcing overall. The third area that we spoke about was engineering services, and I think there are two main areas that we are seeing on engineering services growth. I think one is a pure technology view, right? And we did this study last year along with NASCOM on how engineering and manufacturing systems and processes are getting cloudified. Again, core areas, very difficult to cloudify because these are heavy files, lots of sharing, lots of intellectual property, but it's happening, it's an imperative now for engineering companies. Sustainability is becoming a big driver. Industry 4.0, because of the supply chain challenges that have come again from the regionalization that I spoke about right at the beginning. IoT and analytics as part of all engineering processes has become quite standard. And of course, products are getting mixed or combined with services, and that's the new offering. It's no longer just about the product. So with these changes, I think there's a fair amount of technology imperative or technology drive towards engineering services. What's also happening is that purely from a business industry perspective, for engineering services, automotive is the biggest sector by far. What's happening over there is this huge transition to what is called case mobility, connected, automated, shared, electric. Thank God I remembered that. But yeah, so electric, I think we're seeing even in India, or if you ever travel to California, it looks like we've already made the transition to electric, right? What that means is that there's a lot of investment that's required towards designing new powertrains for electric vehicles, battery technology. All of that, engineering and manufacturing processes, a lot of services are coming over there. Aerospace industry, and this is Rakesh's favorite space, it kind of shut down access or use 5G for their operations. So on both sides, lots of engineering opportunities coming in. Plant engineering, medical tech, I know there's a little bit more, I think, during COVID, with a lot of remote health monitoring and management, it became a little bit of a wild west when it came to medical technology. Of course, I think there is a little bit of regulatory push from the authorities now, but this is not going anywhere. I think remote monitoring, health monitoring, all of those areas will continue to be really big. So, long and short of this is that engineering services is an area, if you're not looking at it in a lot of detail, probably it's time to actually look at it as well.
I think, I want to touch upon it briefly. Going back, right, I'll take an example, a personal one. My wife works for a defense sector company, and I know for a fact that she has to take a lot of those certifications very related to the defense sector, protocols and security standards and so on and so forth. Likewise, I personally worked for the telecom equipment manufacturing space, right? So the standards and protocols of that particular industry is so very specific, right? You call it LTE, you call it 5G, all of those things that go into embedding software into those devices, boxes that are deployed in the network. Those are so very industry specific. So I think with this particular sector of engineering services, I think there is a close orientation with the industry that we are kind of trying to embed the engineering services in. So would that be a fair statement? I just wanted to again look for a nod or a raise of a hand. Yeah. Thank you.
Across the entire world, I did speak about regionalization, but even cutting through those boundaries, even China has some ESG related regulations that have come up now. The US is proposing or is discussing basically a rule that will require all US companies to disclose climate risks in their reporting. Australia, India, it's across the board that there is a first push that is coming in sustainability is towards reporting, because you can only improve something that you're tracking, right? The data needs to be there. This will create a great opportunity when it comes to even data management. A lot of organizations right now do not, they've never really thought about reporting this, and now suddenly there is regulatory pressure, there is market pressure, there is even employee pressure, because a lot of new age employees now do not want to work with companies which are not sustainable or at least don't have those tags. So this is again an investment that needs to be made even to sustain your business, right? So that's why I think the next wave of opportunity that will come from sustainability will be around data management, even finding those data sources within your large organizations. Any enterprise is very, very siloed, very difficult to extract the right data. And I think that's one area for everyone in this room which will be an immediate opportunity pretty soon. So overall, I think these were some of the main areas which lead us to believe that outsourcing, despite maybe the next couple of quarters being a little slow in terms of decision making, I think fundamentally we believe that outsourcing will continue to grow, technology spending will continue to grow. It's an imperative, it is not something that is optional really. But of course, with that comes a certain challenge, and maybe Rakesh will go.
So this one is very close to my heart though. So if you really look at the slide there.
One question quickly on this. Are you seeing any kind of a budget specific investments coming out from organizations and your discussion with CEOs? Because this is something which will definitely drive the budget investments, like you talk about the cyber security is at the top of it, but ESG is coming out of it. What kind of shift you are seeing in terms of the budget percentage investments?
So there is as to how they can augment those goals as we are speaking. So absolutely, I do see the shift. There is need for that creativity and innovation for all of us, right, in the room as advisors, as analysts, as service providers. So one is the demand for digital talent, and as you can see, we do have 1.6 million, talent resources, and the requirement is about 3.2. So that's like double. And specifically around those areas where we saw, the graph really projecting where the investments and future growth is happening, a particular graph going up. one other thing that we are seeing, in the market, and we are actively working with at least two of the tier 1 providers, is the shift in the skill base. Right? Earlier, a developer was a developer, and you could put it in a recurring theme, was a developer. But now, the requirement is about, give me a full stack developer. Right? What does that mean? I don't want my developer to not know how to initiate an instance on public cloud like GCP or AWS or wherever. A lot of the service providers, particularly across the board, they are looking at, and that's where I think we see the talent kind of really shifting. So take these two, take the instance of where the skill base is really moving. I think there is absolutely a revolution waiting to happen in that space, the talent space.
And Rakesh and I are going to be around, so if there are any questions or thoughts, we can maybe take it during the sessions.